The collapse of Sam Bankman $8 billion FTX exchange. To understand why the FTX exchange failed and what we can learn from it. After a huge collapse in the crypto market this week, even Elon Musk took a moment to say that he never believed Sam. FTX, the third largest cryptocurrency exchange in the world, raised $400 million from a series of investors in a Series C funding round earlier this year, valuing the company at around $32 billion. FTX is one of the largest crypto exchanges, having secured various celebrity and sponsorship deals that raised billions of dollars. FTX have been able to rescue a number of crypto lenders when there was a huge crypto crisis. Bankman-Fried was already a rich man when he started his crypto trading company. But things went completely wrong in the second week of November. Sam Bankman-Fried is the founder of FTX, and his company was founded by his brother in 2016. Sam, who is also known as SBF, worked previously in the charity world and in investment firms. FTX was founded by banker Sam Bankman-Fried in 2017, enabling traders to trade on the crypto market at very low fees and with flexible trading features that allow them to choose the best trading pairs they want to trade. Bankman-Fried made lots of money from FTX and Alinda, earning between $350 million and $1 billion in profit in 2020, according to Bloomberg. Sam Bankman-Fried was worth $26 billion at its peak, though his wealth had dropped to $16 billion just this week. Bankman-Fried had become a major donor to major parties, and he'd gotten celebrities like Tom Brady to help him promote FTX. He had also arranged for FTX to name an NBA arena in which the Miami Heat play. So, how did this happen? Earlier this month, cryptocurrency publication published a report that called into question whether Bankman business was actually stable. Here is a brief timeline of some of the news that happened during the month. November 2nd, key details of the balance sheet of a major cryptocurrency investor. We found out that Alinda Research LLC is heavily invested in a company called FTX and they own their FTT token. November 6th, Binance CEO Changpeng Zhao says he is selling all his remaining holdings of FTT tokens. Minutes later, Caroline Ellis tweets that her company and Alinda Research will purchase Zhao's FTT tokens for $22 each. November 8, the FTT token price fell below $22. The cryptocurrency exchange Binance has announced that it has made an agreement to buy FTX, though this is not a done deal yet, and the agreement needs to go through due diligence before it can happen. This announcement should bring some relief for crypto traders who are currently panicking. November 9, Binance is already starting to check out FTX's books and loans, but it has not shown definite interest in buying its shares just yet. Mark Karpels, the former CEO of Mt. Gox, which was hacked in 2014 and had $470 million worth of Bitcoin stolen, sold the majority stake in his own Bitcoin trading platform to Japan-based FX brokerage firm Financial Technologies International, worth approximately $60 million. Justin Sun says he won't give any more specifics about what is happening with FTX. November 10, Alinda Research, the institution and center of the drama, is on its way out. Frozen assets owned by the FTX exchange. They've been blocked by the government. November 11, FTX files for bankruptcy protection in the United States. Alinda Research and FTX are two different companies, but assets of Alinda Research were tied to FTX, which created the FTT token. However, there's no evidence that this is wrong. It just raises questions about the exchange's liquidity. Changpeng Zhao, the CEO of Binance, FTX's how could this have happened? Bankman-Fried admitted that he had F-up twice before FTX crashed when he tweeted that he was unhappy with how many customers he had in FTX and how much FTX owed them. But Reuters suggests that other factors may be at play. For instance, banks may be reluctant to let customers trade in cryptocurrencies. Reuters says that earlier this year, FTX founder Steve Bankman-Fried moved money from FTX to Alinda Capital in order to avoid being penalized for what happened. What other people will be hurt by FTX's collapse? FTX has a lot of high-level investors, including SoftBank, Vision Fund, and Sequoia Capital, so some of its investors may even have money in FTX too. Sequoia Capital said that it will end its investment in FTX. The chaos could also hurt some of FTX's investors, notably those who live with him and run his businesses out of the Bahamas. It's likely that some of the people involved were part of the business that Bankman-Fried built. They were friends and former colleagues who were all in on the deal. It's likely that other Bitcoin exchanges are also feeling heavy losses right now, too. What did it all really happen? It's tough for crypto investors, who lost a total of $2 trillion in the market last year. FTX is one of the biggest crypto exchanges in the world, and now the FTX saga is spreading to other crypto exchanges in the world. It led to a drop in crypto market value of nearly 11% in one day as of Monday. There are fears that crypto will soon have its own Lehman Brothers moment. Industry insiders said that the FTX drama could cause other financial regulators to try to clamp down on the crypto industry or cause big banks to be cautious about allowing customers to trade in crypto. Some experts are worried that the FTX meltdown will cause customers to become more hesitant about investing in crypto assets, which could cause other people to also be hesitant to buy crypto. That's called contagious crypto. JP Morgan thinks that a crypto catch-up is coming, and experts warn that investors should be ready. Main rival decided to liquidize more than $530 million worth of FTT tokens. Customers raced in to cancel their transactions, and it was reported that FTX received $6 billion in requests to cancel its contracts over a few hours. FTT dropped 32% after the bankman announced that he was selling the exchange. The price of FTT tokens climbed again on the announcement. Binance is negotiating to buy FTX for $22 each, essentially bailing out FTX. FTX was in trouble even before Binance announced that it was willing to buy FTX for $22 each. Binance withdraws from the FTX deal, citing the difficulties it was having conducting its due diligence and possible problems handling customer funds.